All right, let's jump right in. The whole global economy feels like it's on a bit of a tightrope walk right now.
A very thin one, yeah.
And you can really see it in the statements coming from central banks, especially across Asia. They're defining the tension that's driving everything.
It's all about the if this week. I mean, you look at the Bank of Japan, Governor Ueda came out and confirmed, yes, rate hikes will continue. But then he immediately added this huge caveat. It's totally contingent on their baseline scenario actually playing out. It's a signal, but a fragile one.
And that conditionality is so important. Compare that to, say, the Bank of Korea. For the BOK, any more rate cuts are tied to three different things: inflation, growth, and financial stability. They're basically admitting their path forward depends on a much more complex set of outcomes.
Exactly, which shows a lot less certainty, about a single path forward. And then you've got the People's Bank of China.
Also holding back.
Very much so. They reaffirmed their policy will stay moderately loose. But the thing analysts jumped on was the complete absence of any specific guidance on rate cuts. So they're signaling support, but holding the schedule very close to their chest.
And, that careful tone, it seems pretty justified when you look at some of the data coming out, especially from Japan.
The Tokyo inflation number.
Exactly. Tokyo core inflation slowed by more than anyone expected. And what really stands out is the cause. It's being pinned specifically on a drop in utility costs.
And that's the key detail for you to really focus on. When it's just utility prices falling, it suggests that, core demand isn't collapsing. It's a cost side thing, not a broad demand destruction.
Which gives the BOJ room to breathe.
It gives them a lot of flexibility, yeah.
But then you look at the fiscal side in Japan, and this is a totally different story. The government just unveiled a record budget for FY26.
A massive spending plan.
And it's running right up against their other plan, which is to reduce how many super long bonds they issue.
This is where it gets a little technical, but it's important. Super long bonds, we're talking 30, 40-year maturities.
Right.
Reducing them means they're trying to manage the long tail of their national debt. So it's this dual approach.
Yeah.
Spend big now, but also signal that they're trying to fix their debt profile for the future. It's a very delicate balance.
What's fascinating is the market prediction that comes out of all this. You combine that pro-growth spending, corporate reform, the AI boom, and analysts are saying Japanese stocks are heading higher in 2026.
But here's the major disconnect you have to think about. That confidence in stocks is happening at the same time that the forecast for the yen is. Well, it's expected to stay under a lot of pressure.
So why is that? If the economy is growing and rates might go up, why is the currency so weak?
It suggests the market is worried about external factors. Maybe the huge interest rate difference between Japan and, say, the U.S. is just overpowering any domestic good news. The currency and the stocks are telling you two completely different stories.
Okay, let's shift gears then. From that macro picture to the corporate world and really the technology arms race.
And we saw a really aggressive move from NVIDIA this week.
A Grok deal.
A huge technology licensing deal with Grok. But it's not just about the IP. The key detail is that Grok's people, the actual engineering talent, are joining NVIDIA.
So it's an acquisition of talent as much as technology.
I'd say it's more about the talent. It's a move to consolidate expertise and just accelerate their own roadmap by absorbing a competitor's best people.
So how do you even compete with that? When the top player is moving that fast, we are starting to see an answer.
You're talking about the Fujitsu and SoftBank partnership.
Exactly. They're teaming up to develop a next-gen AI memory chip.
And their stated goal is, well, it's incredibly aggressive. They want to directly rival high bandwidth memory, or HBM.
Which, for anyone who doesn't know, HBM is basically the foundation of modern AI. It's what lets the processors get data fast enough.
It solves the data bottleneck. So this Fujitsu SoftBank plan is a direct foundational challenge to the current hardware standard. They're trying to build a viable alternative.
And beyond just the chips, the AI models themselves are about to completely change the gaming industry.
Right, and we're not just talking better graphics.
No, this is groups like Google DeepMind and this billion-dollar startup World Labs.
Yeah.
They're working on AI world models that can build and populate game worlds on their own, seamlessly, maybe infinitely.
Which just radically changes the whole content creation pipeline for gaming.
But while all this future tech is getting funded, the current market is showing some real stress, especially in China.
Toyota.
Yeah, Toyota recorded a rare monthly sales decline, and they tied it explicitly to weakness in the China market. That's a huge warning sign for global consumption when a giant like Toyota hits a wall.
But here's the counterpoint, and this is where it gets really interesting for you to watch. Shipments of foreign-branded mobile phones in China
They're way up.
sharply up year over year. So you have car sales stalling, which suggests people are cautious about big purchases.
But they're still spending on high-status personal tech. It's a very specific, very segmented pattern of spending.
And as companies deal with that, we're seeing geopolitical signals being sent with a lot of precision. After the recent Taiwan arms sales, China hit some U.S. defense firms with sanctions.
But they were largely symbolic, right?
Mostly, yeah.
Yeah.
Because those firms don't really do much business in mainland China anyway.
So what's the point?
It's diplomatic pushback. It lets Beijing register its official displeasure with Washington without actually hurting its own economy. It's a political tool, not an economic one.
A more interesting tool, though, might be tourism.
Oh, yeah. Beijing apparently told travel agencies to cut the number of tourists going to Japan by 40%.
And this is happening right in the middle of these Taiwan tensions.
It's China using economic policy, which they can adjust very easily, to show their political displeasure with Japan, which is, of course, a key U.S. ally in the region.
Speaking of U.S. politics, we got an announcement that Takeichi, a major figure in Japanese politics, is planning a meeting with former President Trump in the U.S. early next year.
That is a very significant move. It's all about pre-election positioning, trying to build connections before the U.S. election cycle really kicks off.
Okay, let's move over to global security. There was confirmation that the U.S. conducted airstrikes in Nigeria.
Against ISIS terrorists.
Right. It's a reminder that even with the focus on places like Ukraine, these security challenges are global and multi-front.
And on Ukraine, we got an update from President Zelensky. He said he had very good talks with U.S. negotiators.
The key thing here seems to be a new flexibility. He said he's open to the idea of a demilitarized Donbas region.
That's a huge shift. That willingness to even discuss a specific concession it's highly notable. And then he added that a lot can be decided before the new year.
Which, as we said, injects a ton of urgency into these talks. Something is pushing them to find a resolution, and fast. Meanwhile, there's a high-stakes situation playing out at sea. The U.S. Coast Guard is getting ready to board the Bella 1 tanker,
which is linked to Iran and Venezuela. This is all about enforcing sanctions on illicit oil trading. It's a big deal.
And finally, let's touch on some domestic political shifts. In the U.S., a lot of congressional Republicans are announcing they're leaving D.C.
Right, and 10 of them, 10 House Republicans, are specifically running for governor back in their home states.
It signals this shift in focus, maybe from legislative roles in D.C. to executive roles at the state level. It could really change the dynamic in Congress.
And just quickly, outside the U.S., the Honduras presidential election was finally decided. After weeks of uncertainty, the Trump-backed candidate, Tito Asfora, was declared the winner.
Okay, so to wrap this all up, let's hit two last data points. They tell a really interesting story about market confidence in policy debates.
First, Hong Kong.
The IPO market there is showing clear signs of weakness in Q4. New stocks just can't seem to rise past their listing price.
And this is more than just a bad quarter. When new stocks consistently trade below their IPO price, it tells you the market is skeptical. Either the valuations are too high, or the capital, which Hong Kong depends on, is just pulling back.
It's a bad sign for optimism. And lastly, there's a policy debate brewing around the Make America Healthy Again initiative.
This is a classic tension. The processed food industry is pushing back.
Arguing what? That it'll make food more expensive.
Exactly. They're saying that while the health goals are good, the policy will hurt affordability, especially for lower-income families. It puts public health and food costs in direct conflict.
So that's the landscape. Central bank policy balanced on a knife's edge, tech giants consolidating talent, and geopolitical signals sent via tourism quotas. It's complex and it's moving fast.
It really is.
So here's the final thought for you to consider. When do all these huge tech deals, these next-gen chip plans, when do they finally translate into a real measurable force that can push back against the economic headwinds we're seeing right now? You know, like the sales declines at a giant like Toyota. That's the balance we have to watch. The incredible speed of innovation versus the tough reality of global consumption today.